Hi everyone, and today in this video we are going to discuss an interesting company which is in the FMCG sector, and the company name is Manorama Industries. So let's start with the report, and just a quick disclaimer that this is not a buy or sell recommendation. So Manorama Industries is a global manufacturer of specialty fats, exotic butters and cocoa butter equivalent, which is their specialty, and it is used in chocolates, food and personal care items, and they supply their products to the top companies like the Mondelez, Ferrero and Unilever, and there are much more. So currently they operate a fully integrated model where they source the tree bone oil seeds, the different type of seeds like the sal, mango and chia seeds, and along with that they also have subsidiaries in different type of countries in the African continent, and they also have 18,000 tribal sourcing centers. They also have a manufacturing plant which is located in the Birkoni and Chhattisgarh. Then they also have different type of plants which is used in the multiple process to create the final product, and currently they hold the number 1 position in the sal seed and the mango based specialty fats and butter segment. Now let's take a look at their shareholding pattern. So currently promoters have 54%, then FIs are holding only 3.4%, then DIs are having around 4.6%, where LIC is holding 1.6%, and Bank of India Multicap Fund is holding 1%, and lastly public holding is around 37.5%. Now let's take a quick look at their product portfolio. Like for example, in the cocoa butter equivalent, the raw material is the sal seed, mango seeds, which is used in the chocolate and food industry, and majorly it is sourced from the African countries. Then afterwards they also have stearin, which is used in the food segment. Then afterwards they also have refined butter, which is used in the cosmetic industry. Then they also have de-oiled cake, which is used in the cattle feed industry, and lastly they also have Milkoa, which is used across all the sectors we discussed above. And now let's come to the next segment and we will see the industry overview. So this is the data point of global specialty fats market. In 2025 the market is around $16.2 billion, and it is expected to be around $23.2 billion by 2030. And next, if we take a look at the cocoa butter equivalent market, so currently it is standing at $1.3 billion, and that is expected to be around $1.45 billion in 2029. So after looking at this data point, we can say that the industry is growing at a CAGR rate of almost 6 to 8%, and Manorama industry itself is growing at a very higher pace compared to the industry levels. And now let's come to the next segment where we will see the import and export data point done by the multiple countries. So as we can see over here that Germany and Netherlands, they are the biggest importer of these products, where Germany imported $853 million in 2023 and Netherlands imported $505 million. And if we compare that with India, so currently India has imported around $101 million worth of products. And next, in the exports data, here we can see that Netherlands is the biggest exporter, and they exported $1,074 billion worth compared to India, who only exported $44.9 billion. And as this market will get more developed, we can see that the increase in export data from our country in the coming future. And now let's come to the next step where we are going to see the manufacturing process in this industry. So these are the manufacturing steps, where the first step is the raw material sourcing, which is primarily shea nuts, sal seeds, mango seeds and exotic fats. And after collecting raw materials, so these seeds are extracted to obtain the crude butter or oil, and after getting the extracted product, so the refining is done to remove the impurities part in that product. Then after that the refined fat or oil is fractionized, and after that it is blended and formulated to match with the actual cocoa butter properties. And this whole process needs very quality control and testing. And finally, after all these steps, the last step is the packaging and distribution, which is distributed to multiple chocolate and other global companies. So I have tried to explain this process in a very simple and easy manner, but anyone who is interested, they can definitely check the annual report or the PPTs of the company to understand more in depth. And now let's come to the next segment where we will do the financial analysis. So as here we can see that in 2021 they only had a revenue of 203 crores, and this year they made a revenue of 771 crores, which is a huge jump of more than 3x. And in 2027 they're expecting to generate a revenue of 1430 crores. Then if we take a look at their EBITDA, in 2021 they had only 37 crores, and in 2025 they gave a EBITDA of 191 crores. So that's a very huge and fast jump in their EBITDA. And if we take a look at their FY27 estimations, so that is expected to be around 423 crores. And next, if we take a look at their EBIT, so in 2021 they made a EBIT of 29 crores, and this year in 2025 they made a EBIT of 169 crores, and for FY27 they're expecting to generate around 397 crores. And lastly, if you take a look at their PAT, so in 2021 they made a PAT of 16 crores, and in 2025 they had a PAT of 112 crores, which is almost a 10x jump, and in FY27 it is expected to be around 293 crores. So after reading this data point, we can definitely see that the company is growing very fast. Now let's take a look at some of their ratios. For example, if we take a look at their EBITDA margin, so in 2021 that was 18%, in 2025 that came up to 25%, and for FY27 it is expected to be around 29%. And lastly, if you look at PAT margin, so in 2021 they had 8%, in FY25 they had 15%, and for FY27 they're expecting something around 20%. So according to me, currently the company is in the hyper growth cycle and they're enjoying their operating leverage. And now let's come to the next segment and we will do the peer comparison. So these are the two companies which are close peers to Manorama. The first one is of Fine Organics, which is in the oleochemical segment, and second is the AAKFB, which is a Sweden company, and they are the exact competitor of Manorama, but it is a much bigger player compared to Manorama globally. So if you look at revenue, so Manorama made 457 crores in 2024, whereas for the Sweden company they made 45,000 crores of revenue. So they are way bigger than Manorama. And if you look at their EBITDA and PAT margins, so Manorama had 16% compared to the Sweden company where they had 12%. And if we compare that with the PAT margins, so both companies almost had the same margins. But of course, as we saw the data point earlier, so Manorama is expected to generate higher PAT margins in the coming future. Next, if we look at ROE, so Manorama had 12% compared to the Sweden company where they had 18%. But there are some drawbacks of Manorama Industries, where for example, if you look at their inventory days and lastly the working capital days, so that are very high compared to the other two companies. And one of the main reason is the seasonality of the raw material in the African countries. And now let's come to the next segment and we will see the management focus for the coming future. So the first point is the management has given a guidance of 1050 crores of revenue in FY26, and they are also expecting 25 to 30% of volume growth, and they're also expecting that their exports growth is going to 4x in the next 4 years. Next, they have mentioned that they have started a new 25,000 ton fractionation facility, and they are also focusing to increase their capacity expansion to 30% in the second half of FY26. And lastly, they have also mentioned that they have a new seed storage facility, and their main focus currently is to do a forward and backward integration projects, so that will help them in the long-term growth. So after reading all the good data points of Manorama, let's come to the risk. So the first risk in the company is that the raw material is dependent on the seasonality in the African countries. Then the second risk is that they have a 60% of revenue from only 3 to 4 customers, so that is very highly concentrated. And lastly, they also have cash flow issues, where their current CFO is negative 59 crores, and they also have increasing borrowing cost. And along with that, as we saw earlier, that they also have a bad working capital days. And now let's come to the last segment where we will do the technical analysis. So as we can see that in Jan 2024, it was trading around 430 rupees, and after that the stock has been trading in a very good upward momentum. And in July 2025, after their latest results, so the company gave an all-time high of almost 1800 rupees, and now currently in the short term it is looking in a downward trend. But after reading all the data points, I am very bullish on this company. So thank you for watching this video. What do you guys think of this company? Write down in the comment section, and see you in the next video.